Welcome to Trader TV, your insight into the trading climate for professional investors. I'm Dan Barnes. Inefficiencies in the repo market create unnecessary operational headaches for buy and sell side traders. I'm speaking with Tim Martins, Head of Product for Repo and Money Markets at MTS, and Oliver Clark, Head of Product at MTS, to discuss how the right protocols and processes can deliver more effective trading and ultimately better returns to investors. Oliver, Tim, welcome to Trader TV.
Thanks, Dan.
Good morning, thanks for having us.
So Oliver, how important is the repo market to buy-side firms today?
You need to consider each buy-side firm in its category because each buy-side firm will have slightly different requirements, whether it's simply to invest cash, whether it's to manage a portfolio of bonds, if it's a central bank, perhaps to lend QE bonds back into the street and then reinvest that cash in a neutral fashion. So from a vendor perspective, we have conversations with buy sides from all of these categories I've just mentioned.
Have liquidity disruptions been increasing?
I think since 2008 there's been a number of disruptive factors within both the European and the US markets. More recently in the US there was a significant disruption to liquidity. Where we operate in Europe, I think the sterling markets have perhaps been impacted more than the euro markets. There was a significant period where the access to sterling liquidity was difficult for certain asset management firms. The repo market was not as liquid in gilts as they would have liked. I think that liquidity has perhaps improved over the last couple of years. Certainly from our perspective as a trading platform, we are having conversations, frequent conversations with buy side at the moment about fixing the roof while the sun is shining, perhaps rather than waiting for the next crisis and disruption.
How would you characterize execution quality in repo markets today?
I think the key thing is for the repo markets that execution quality is not just measured on price.
Right.
It's quite unique in that actually access to balance sheet is possibly as important or more important than price and an outright level. We facilitate, for instance, the dealers are able, or so the buy side are able to trade behind the best price in order to get the full size done, potentially. So I think that it's your metrics are very different as a buy side. You're looking to fund your whole portfolio. You're looking to really kind of access consistently funds, and actually sometimes that means that in order to get the best execution, you're looking to build on the relationships that you've got with your dealers, and you're looking to trade in a consistent way.
You can see that reflected against the interdealer market, which is more commoditized, more standardized, more liquid, cleared, where you don't really see the same spikes and disruptions to liquidity over certain year-end, for example, or month-end, quarter-end. You may see some, certainly year-end, even in the interdealer market, you may see some spikes, but compared to access to liquidity and balance sheet for buy side, it's really much more mature market. So I think if you can increase the efficiency in the D2C space, then you'll increase the access to liquidity and the reliability of that access to balance sheet.
And you mentioned there are different metrics to measure execution quality. Could you just sort of give us a deep dive into execution quality and how that might be assessed?
Again, hard to assess. I think, it's when you're assessing your execution quality, you're really assessing prices that you as a buy side are getting from different dealers. I think that it's hard to benchmark yourself against the market because there isn't a level market. The prices you have for one-day CCP settled trades that go through on our interdealer market are very different to the prices that are being shown to clients, because there's obviously the dealers have to consider credit risk, balance sheet impact, and so actually benchmarking as a buy side against the interdealer market is almost an irrelevance. I think really you're looking at your access to balance sheet versus your pricing versus your dealers, and really having to assess it that way.
Yeah, I mean, it absolutely makes sense, and I think that's one of the problems that we've been trying to solve with our D2C trading platform, because it gives you access to direct streaming axes, let's say, from your counterparty dealers. So your dealers who are acting in the cleared market that you can't access are able to stream tiered and precisely measured prices to you as a counterparty. So as a buy side for the first time, actually you do get pre-trade information, you do get indicative flows that indicate where a special bond or GC happens to be trading on any particular day. So you have that pre-trade information to inform your trading and to choose your counterparty of choice, and also to enrich your post-trade information to provide a certain amount of best execution, let's say, alongside access to certain daily bulletin information coming from the interdealer market as well.
I think interesting to note, again, kind of just the variation in how different buy-side interact with the platform. You'll have buy-side who are essentially saturating their credit line exposure with all of their bank counterparties. Now, for those guys, what's important is to keep those balances in place, to keep access to that balance sheet and to kind of roll those trades. So they're not looking to come onto a platform such as ours and suddenly start spraying their request for quotes out to a whole raft of dealers. They're looking to use it as an efficiency tool. And for that respect, so they get the SDP piece, SFTR reporting availability. So it's more of an efficiency tool in that respect. For other buy side, they are looking really to go out and to search for the best price, and they have that leverage within the street.
And a wider network of participants as well.
That's it, exactly. So we give them that tool to be able to actually efficiently put out that inquiry to a wider range of people.
The BondVision Repo platform sits as part of a multi-product platform. So you've got cash bond, rates, credit products on there as well. So for a buy side interacting with BondVision, you have the familiarity, but you also have the pre-established network there to build on. You may already be trading on the rate side. You can use that cash information to inform your repo trading as well. From that single front end software.
Oliver, Tim, thank you very much.
Thanks,
Pleasure,
Sam.
thank you.
I'd like to thank Tim Martins and Oliver Clark, and of course you for watching. To catch up with our shows on other markets or to subscribe to our newsletter, go to tradertv.net and etftv.net.